Let me welcome on board Pradip Kumar Das as well, the CMD, joining in on the show right now. Mr. Das, great to have you on ET now. Thank you so much for taking the time out. I guess this was much needed, a clarification. Help us understand what is the implication of these tighter project finance norms for you in particular.
Thank you. Thank you very much. First of all, let me tell what this provision is in two parts.
Sure.
One, improvising the further project appraisal norms in order to prevent weak projects, number one. Number two, having sufficient provisioning for the under construction project. Initially, it has been proposed 5%, but that is in a staggered manner in 2 to 3 years' time. But this is a draft guideline, and the various stakeholders are going to share their input with RBI, and finally, they have to take a call. And some places RBI has gone for tightening it, and probably that is in order to ensure that projects are not getting into NPA just like that. Number one, and number two, some places RBI has also enabled, like earlier RBI provision, the existing provision was like 80% of the economic life of the project one can be financed. The project can be financed, but now they are considering for 85%. So whatever is fair, probably RBI has gone for it. And as far as IREDA is concerned, we are a pure green finance company. And the difference between a green project finance company and a fossil fuel finance project company or a normal infra company is our construction period is quite less vis-a-vis others. Particularly if you take the case of solar and wind, it takes 6 months to 1.5 years to complete the project. And in case of hydro, it may be 2.5 to plus some more time, depending on the geographical location. But by and large, this is the standard time. And so far, if you see our book size, substantial portions are commissioned assets. So in the new and emerging, where provisioning requirement is more, we otherwise have a provisioning coverage there quite well.
Right.
And I'll clarify one more point. There is a difference between bank and non-banking for this purpose. For banks, RBI prudentials are followed as on date, but for non-banking finance companies, expected credit loss methodology under Ind AS that is applicable, and we are all adopted those. Not only IREDA, other NBFCs in India, they have adopted since 4 to 5 years. And as on date, the provisioning methodology of ECL and the RBI provisioning, we have still a space of 92 crore in our book of March 24 result.
Absolutely. But Mr. Das, you know, the street's concern is not whether you're capitalized or not. It's not regarding our, provisioning. It's not regarding ROEs either. But the concern is that your tier 1 ratio is going to get impacted, and thereby the valuation multiples that your stock quotes at is also going to get a little bit lower. Defend that point for us.
See, first of all, if we be having the additional provisioning, then only that is to be routed through OCI and where my net worth can get dented, which will have slightly, not much. And as I told, we ourselves is having that kind of prudential norm by our management approved and which we are following now. And this expected credit loss methodology, and if you see last 3 years, our provision coverage ratio is gone up from 45 to 58%. So we ourselves are ensuring that fair amount of provisioning are in place, because that is on a true and fair basis, it is being reported. So what I'm telling, even if my provisioning will go up, that additional provision which I have to book, that will be going to impact my net worth, which will impact on my CRAR. That is what probably you are trying to tell. My PAT is not going to be impacted. Now, in our case, that amount will not be very significant if it is adopted as it is what has been given now. Of course, the numbers our team is working out, the exact numbers we can work out very soon. But since our projects are very short gestation period, I'll repeat that, wind, solar, hydro, particularly wind, solar, 6 months to 1 year. And even in emerging, if you take CBG and ethanol, those are also not that 2 years, 1.5 to 2 years project is getting completed. So therefore, we do not foresee much impact in our loan financials vis-a-vis the companies who is having
Sure.
project financing of fossil fuel or having longer duration or other infra project, general infra project, be it house building or etc., which is having a very longer gestation period where the provisioning requirement will be required more.
Sure. Let me actually break it down, Mr. Pradeep. We have put on board multiple points, so let's break it down. First up, help me understand what's the timeline that you're expecting this to get implemented, and for yourself, what's the portion of AUM which is right now under implementation? If you can break that down for us.
My guess it will be 6 months to 1 year because RBI will give reasonable time for the agencies and entities to fall in line. Number one, apart from this complying, this provisioning and etc., quality appraisals, legal PCC and PDC conditions are to be more robust, as well as post monitoring that has to be more robust. For which you need to have a state-of-the-art IT system in place. And if you see, we have been improvising our IT on continuous basis. Our present our IREDA Business Center in Delhi, that is, we are working on a zero paper mode. We have reduced our 98% paper consumption, which is confirming that
Sure.
our IT has been improved quite a lot. And 6 months to 1 year down the line, I hope time will be available. And as far as our book size is concerned, as I said, significant portion of our books are already commissioned, and maybe around 40% will be on the construction stage.
Okay.
And in that also, fair amount of progress has been made. Net around 25-30 will be in true sense and spirit project under construction, for which you may have to look into marginal provisioning.
Okay, so that 25-30% of the book which is under construction right now, what kind of provisioning could be there? Could you give us a ballpark number to begin with? Because the street is worried about the quantum. If you can give us directionally, what could be the size of it?
See, the exact number I cannot tell now because already we are having 1.5% of the provisioning and RBI is talking 2, 3 and 5 in staggered manner. So even if they it is mandated to have 2% initially, after a year, and already we are having 1.5. So that 0.5 after a year may not be significant to us.
So it might not be significant to you, but you talked about, Mr. Pradeep, how it might be a lot more significant for other banks who haven't, haven't lived up to that ECL norms as yet, as well as other NBFCs which have exposure to longer gestation period. As a sector expert and a person who's been there in the sector for over 2 decades, talk to us about, Mr. Das, what could be the impact on the likes of REC, PFC? And I'm not talking about the quantitative impact, but do you think there could be a large impact not only on the profitability but also the growth, because the part of capital will get used for provisioning, etc. as well?
Well, I'm ex-REC by the way, so fair amount of information otherwise also I know. But if you see project under construction, in those cases provisioning will be required. And of late REC, PFC, they are enhancing their loan book in green energy space also. So exact, I cannot comment on them. It will be fair to ask REC, PFC management. But I have not seen their loan book composition as of now. So it will not be fair on my part to comment on REC, PFC particularly. But knowing, because we are government NBFC, we are subject to all kind of compliance and governance norms. And I'm sure they must be having action plan in place to overcome this.
One more question that
but
I have.
As far as banks,
Sure.
you asked for banks. As far as bank is concerned, yes, since bank have not adopted this ECL provisioning norms, bank will have to face it very harshly because they have to have additional provisioning. And in case of banks, if their books will be having this long gestation period projects, then they have to have this additional provisioning.
Okay, but Das, you answered about, Mr. Das, you answered about banks as well as other NBFCs, but what about for yourself in terms of growth? Given the fact that RBI is tightening the norms a bit, do you think this would call for a lot more calibrated growth and limit the growth rate that you were seeing earlier?
No, I do not think, because this target of 500 gigawatt is India's target, and RBI is part of it. Though RBI is an independent agency, RBI is responsible to ensure healthy project financing culture and environment in the country. So they will be definitely having checks and balance in place. And second, we need to add 310 gigawatt of renewable energy capacity by 2030. In any case, we have to have these project installations. And what this kind of governance compliances will ensure that the developers will be more serious and the lender will also be more serious. So also the policymaker will be more serious, because these three agencies have to work cohesively to enable the ecosystem so that speedy RE development can happen in the country. Not only RE development, energy transition, decarbonization, and overall economic growth in the country, because we are aiming to become developed economy by 2047. So therefore, I do not foresee little bit of discipline and improvement. Maybe initially there may be some little impact. And see, governance and compliance is nothing but discipline. So when you adopt discipline, initially it is painful, but in due course of time, it will enable speedy development. So that whatever little bit of slowness will come in the initial days, probably after a couple of years, we'll find that the speed is more.
Mr. Das, what is it that you would like to say to your shareholders right now? Your stock is around 172. It's a downtick of 4%. We've not seen any meaningful recovery coming in. I'm sure once they hear you, we would see a little bit of a rebound at least, because the worry on the street is that, you know, for the NBFCs as a cluster, this move could potentially impact their adjusted net worth anywhere between about 8 to 13%, and the valuations would ease off a little bit. Your shareholders have been a very happy lot ever since the listing. What would you like to tell them?
See, despite everything, it is still 5 times of our issue price, number one. Number two, we have enough CRAR strength with us today, around 20%. Even if some provisioning additional required and CRAR gets dented, still enough space is there. And we have an action plan in place, and team is working on it to have a roadmap how best we can infuse and enhance our equity base or quasi-equity base in order to ensure healthy CRAR in time to come. We are quite confident that having this kind of best quality corporate governance standards, and mind it, we are the first non-banking and banking agencies, both government and private sector space, who has reported the result in 19 days this year. And we are planning to do earlier next year. So we have best quality corporate governance mindsets and culture among our team. I think we can overcome all those things in time to come.
Sure, and you've recently been awarded the Navratna status as well, if I have it right, which means your cost of borrowing get that much support as well. But Mr. Das, the other thing I wanted to know, you are saying that perhaps the growth rate is not going to be challenged as much. You're maintaining an AUM growth rate of 20 to 25% in the year gone by. What's the expectation for FY25? What growth rate can you maintain? And also on return on assets, what kind of target you've set for yourself?
See, if you see last 4 years, we have never been targeted on numbers. We have targeted on fundamentals and governance. And if you see 4 years, we have given 16 quarters and 12 quarters phenomenal growth and phenomenal qualitative corporate governance improvements. And coming back to RBI governance norms, we are very fortunate. Last 3 years, our inspection has been over, and we have not received any kind of major comment from them. And many occasions, they were quite happy with us. In fact, last 3-4 years, the kind of turnaround in our numbers and our governance cultures, that has given strength to RBI also.
Mr. Das, before I let you go, you're on track to achieve that zero NPA number because you're already below 1%. On track to make it zero soon?
If we can come down from 7.18 from 2019-20 just in 4 years below 1, mathematically, if you do the extrapolation, I think a couple of years down the line, we may be reaching 0. Our team is aspiring. We don't put any timeline, because if the moment we put timeline and mindset, then our quality of governance may get dented. Project appraisal may get dented. That's therefore, we don't focus much on number. We sign MOU with the Government of India, MNRE, and then subsequently we focus only on our fundamentals and the kind of ample business opportunity available in the market and kind of expertise which we have built in last 37 years. We are quite confident if we keep on maintaining that, numbers are going to follow us.
Okay, numbers will follow the focus that you have on fundamentals. Thanks, Mr. Das, for making time and candidly answering all those questions on the latest proposal from RBI.
If you like this video, then like, share and subscribe to ET Now.